Hey everyone, and welcome back to Data Driven Value, where we show you the tools and we teach you the skills to help you take your financial freedom into your own hands. So this is a bit of a follow-up video to one of our previous ones in the last couple days where we talked a little bit about alt season. So I did have a request from some members within the Into the Cryptoverse Premium community to kind of do a little bit more in-depth kind of analysis around some of the altcoins I might be potentially looking at. So I kind of had the idea for this video. I wanted to put it together for kind of some of the newcomers or like some, when you have friends and family coming into this space at this point in the market, it can be pretty overwhelming. There's a lot to kind of dissect. You don't really know what you're buying or what you're doing. You don't know how you should structure your portfolio. So kind of the topic today, we're going to be looking at navigating the altcoin market and building a risk-adjusted portfolio. So we see here during every crypto market cycle, essentially we go through various periods where certain assets over and underperform. During the majority of the bear market as well as the early stage of the bull market, we do typically see Bitcoin outperforming against the majority of altcoins. Therefore, for a lot of the cycle, it's a safer and better risk-adjusted bet to be positioned in Bitcoin. That being said, I think we're getting to that point in the cycle where we should be hedging for the alternate kind of view where altcoins and Ethereum are going to start to outperform. Again, this is just assuming that this is a normal Bitcoin and crypto market cycle and that it continues playing out. This doesn't take into account anything. If there was a black swan event, if we went into a recession or something happened kind of on a global economic scale to derail markets, that's not something we can predict. And it's not something that it's always kind of in the back of our minds. And that's why we have that emergency cash position in our portfolios for that event. But that being said, we're just following the charts. So we'll be following the charts again in this case. We do see here, we're looking for that cyclical mania phase. So that's what a lot of people will call altcoin season. So typically we're going to see altcoins go on to drastically outperform Bitcoin in kind of the near term for the remainder of the cycle. And then by navigating various charts and metrics, we can kind of determine when it's most likely for this alt season to occur, as well as we can also kind of identify some stronger altcoins that'll experience greater strength against Bitcoin as opposed to other altcoins. So I'll show you that kind of down here. We're going to take a look at a few different charts first. So the first thing I'm going to touch on is understanding dominance and the altcoins. So Bitcoin dominance, a really important metric you should be following. Every crypto investor should be following Bitcoin dominance very closely. It's really going to be kind of your cheat sheet to navigating the cycle. When dominance is an uptrend, so a macro uptrend for the cycle, it means Bitcoin's generally going to outperform altcoins. So that can mean a couple different things. Either it means Bitcoin is actually, the price is appreciating faster than the altcoins and the market's still trending up, or in kind of the event of like a downwards trend, it just means that Bitcoin is bleeding less than the altcoins. So in both cases, essentially, it does make sense to be heavier in Bitcoin. That's been Benjamin Cohen's stance, and he's been very right this entire cycle, essentially calling kind of the Pico tops and bottoms for Bitcoin dominance and Ethereum Bitcoin. So yeah, definitely we want to be very cognizant of Bitcoin dominance. And for us to kind of expect an actual alt season or mania phase, we need to see Bitcoin dominance topped for the cycle. So that means topped on the high time frame. And then generally in that case, we're looking for that lower high, lower low reversal structure and then confirmation. Once that's kind of broken down, then we can go on to kind of start to plan our next moves, because it does signal kind of the end of that uptrend in dominance and then likely the reversal in both dominance and ETH and alts. I'll just skip over here. We'll go into the chart here. So this is just the Bitcoin dominance chart, looking at it on the high time frame. So just kind of comparing it to the last cycle. You can see our targets here. Obviously, from this high to this low, that 618 Fibonacci acted as resistance. That was the first top. You can see here, once we did top, we started going in this downward consolidation phase. So you can see we were in an uptrend here, and then we reversed that trend structure. We now have those lower lows and lower highs. But you see right here, we were actually able to break back out. So this is a big breakout by Bitcoin dominance back up to that double top, and then ultimately broke down for the rest of the cycle right through here. So we're kind of watching that in the event that we do see something similar play out in the current cycle. So I have this price action here. Essentially, yeah, we've just been in that uptrend this whole cycle for the last 2 years. So uptrend here, you can see right here, we do risk our uptrend structure because we broke this higher low structure here. but we were able to kind of regain momentum on the lower time frame. So I'll just zoom in. Obviously, on the weekly, you can see the MACD is approaching a bullish cross. We'll see if it actually gets that bullish cross. If it does, it's not generally great for altcoins and Ethereum, because we might just see one more push by dominance back up to that double top to kind of mimic the prior cycle price action. RSI is pretty neutral right now, and that's also a bullish cross. So yeah, we'll just be watching dominance. If we zoom into the low time frame, I just want to show you here. That's kind of the breakout. So we're able to break out of this downtrend, similar to the one I showed back there. We do see on the low time frame, our RSI and our MACD are actually a little bit kind of more in the overbought territory. Not quite overbought, but a little bit more overextended, not as neutral. And we do see here, we do have this uptrend structure on the low time frame. So as long as these lows here hold, I'm kind of just in the camp that dominance will just continue. Yeah, no reason to suggest that it has slowed down this uptrend yet. And then I'll just be watching that again. We're watching for that kind of that lower high, lower low, and then subsequent lower high, and then we can kind of gauge from there, looking at our momentum indicators to see either if that's kind of a fake out move and we're likely to continue higher, or if it's most likely to continue breaking down. But yeah, obviously we can see here, so I do have that Fibonacci zone marked. I'm going to get rid of it just to clean the chart up a little bit for you. And then we'll flip over to the 12-hour again, just to get a little sense here. So you can see on the 12-hour too, MACD quite overextended, and the RSI is also kind of right here consolidating. It can continue going up. We might see that's where we get that push up to this kind of region in here. And then this is where I'm looking for that lower macro high again. I mean, the best case scenario is that we reject beneath this peak here, and then we can kind of continue down. But we also have to be ready for something like this to take place. Sorry. But yes, so either dominance is going to come up, reject here, and then back test this line. Maybe take another crack at it, or it's going to break out, come back, retest here, maybe put in that double top, slightly lower macro high, and then hopefully break down from there. But again, we just don't have proper confirmation on a high time frame to assume that this is definitely the local top here. So it's kind of safe-ish, I would say, to assume this is probably the cycle top of dominance here. But yeah, we'll see if this is the local top, if this is the local top, or if we're able to break it and then we put in a double top on a cycle basis. So moving on though, we'll take a look at our next chart here. We're going to look at the Ethereum Bitcoin valuation. So ETH BTC, it's another metric, tracks Ethereum market dominance. And because so many altcoins are heavily associated with Ethereum, this is the chart we look for bottoming structure before we can expect the broader altcoin asset class to outperform. So there are alts that will perform well even when Ethereum's not performing well. So we see ones like Solana and Avalanche and other L1. A lot of the L1s are doing quite well. Ethereum has been a lagger. Ones that are closely related to Ethereum, like the Layer 2s I've talked about in the past, those have been lagging as well. So if you're investing in Layer 2s, you want to see ETH Bitcoin bottoming because generally they're the closest tied to Ethereum and they benefit the most from a reversal in this structure. We can see here on the 12-hour time frame, we're getting a bit of a bearish cross on the MACD. RSI kind of came here and it's just curled back over. Maybe it's just heading back down towards these lows. So yeah, we do see we're at this heavy zone of support here. But that being said, we don't have that reversal structure. So we always talk about that multiple higher highs and higher lows just to confirm that trend reversal. So we're not seeing that on the 12-hour. Obviously, the further we go kind of on the higher time frames, it's not going to have translated. Take a look at the 4-hour. Again, it's just not looking very good. So you can see here, we kind of tried, again, we tried to take out that structure. We had a bear flag, but ultimately that bear flag just broke down. And you see, we kind of came back up, back tested it, rejected, and we're just likely to probably come back and sweep these lows. Again, that being said, I have kind of mentioned my stance on Ethereum Bitcoin at the 0.03 valuation and how it can be worth a bit of a hedge if you don't have any position in Ethereum and you think Ethereum is going to go on to outperform. But again, to dominance not giving us that confirmation and Ethereum Bitcoin not giving us that confirmation yet. So anything you enter at these current levels, it's going to be a bit riskier just because you don't have confirmation of the actual trend. But we're just watching that, and then yeah, we can kind of take a look at it on the high time frame. compared to prior cycles, or the prior cycle here. So we see obviously, RSI is pretty low, especially on the high time frame over here. Maybe we just come back down, sweep the lows one more time, right below 30 RSI. You can see this heavy support zone acted as support all through the last cycle. So we're right back there. I just think anything from here, I don't expect us to go down to that 0.015. That would be a pretty crazy drop. But crazier things have happened in crypto, and if that does happen, that might be a really good opportunity to kind of flip some Bitcoin into Ethereum. But yeah, this is kind of the accumulation zone that I'm looking at right now. Worth it to kind of hedge your bets against Bitcoin. So yeah, really good kind of multi-cycle value here for Ethereum Bitcoin. We'll keep watching this going forward, again watching for that trend reversal, not getting it yet. Moving on here, we see others dominance, so others.d. This is a metric that measures the market dominance of the smaller market cap coins outside of the top ones, so besides Bitcoin, ETH, and some of the other top alts. It gives an idea of some of the newer, smaller projects and how they're performing relative to the older, more established blue chip altcoins. So it's something pretty interesting this cycle. Essentially, I found that others, so like the smaller altcoins, have actually kind of been outperforming the blue chip altcoins, so like those kind of that are in total three, or not, sorry, total three. Sorry, those are kind of like the top 10. So the blue chip altcoins, for a lot of the cycle, they were kind of underperforming, and I think this is just because um, during the bear market, all the tourists kind of leave, and then the only people left are the seasoned crypto investors who kind of trade throughout the cycle and follow the cycle regardless of if it's a bear or bull market. There's a lot of people that just show up for the bull market and they disappear in the bear market. But just kind of my idea is that we saw a lot of recycling of liquidity. So a lot of people were chasing the next narrative. They want to find the next hot coin. We were seeing kind of all these different coins pump up like crazy and then completely sell off 80-90%, and then we'd see a new coin pump up and then we'd see it sell off. So in my opinion, we did see kind of a bit of a recycling of liquidity from people who were already in the asset class. Whereas we're kind of getting to a point now where we're starting to see new market entrants, especially with the kind of the increased coverage of Bitcoin and crypto due to the new administration. We're definitely seeing new market entrants. So that liquidity, those people generally, I find, they're going to go towards the safer, more well-known cryptos. So those are what I call the blue chips. They're just more widely available on different centralized exchanges. They're more well-known, so people are more likely to have heard about them before. They think they're a little bit safer, easier to access. You don't have to go on a DEX to try and go find a contract address and make sure you're buying the right coin and this and that. So I do think a lot of the new retail that come in, they kind of flock to the old coins. So we kind of saw recently, kind of some of the ones that were lagging others for a while, they just shot up over about a month. So all the big coins really just played a big, massive catch-up leg. And that's just what I saw from that new influx of retail investors as opposed to the previous liquidity kind of just recycling around some of the more experienced crypto investors. But so we see here, obviously, we'll just keep watching that. Sorry, let's flip over to others dominance. Yeah, so this is another one I'm watching. We came up kind of rejected here at the zero point 0.5 Fibonacci. We do have a couple levels of support here. I was watching this wedge. We do see the RSI crossed bearishly, so we'll see that coming back down. We'll probably hold this low. And then, yeah, we also see the MACD with a little bearish cross. And then we saw that breakdown from this wedge on the kind of lower time frame. I'll show you how I got this too. I just pulled a Fibonacci from this swing low to this swing high. So we're kind of sitting right above that 786. We do have potential to bounce here, but kind of given the structure of Bitcoin dominance and Ethereum Bitcoin, it's not my base case. And then if we just zoom into the lower time frame, we can kind of get a better idea as well. You see, yeah, we're just in that downtrend structure. Although we're pretty oversold on the RSI and MACD, still just that downtrend structure. Again, we're just waiting for that to kind of reverse and confirm for a trend reversal. Moving on, we also see total 3. It's another representation of the overall market cap of cryptos excluding Bitcoin and ETH. So this can give you a representation of kind of the broad cryptocurrency asset class with some of the larger coins included. It's another useful metric to watch. But just kind of going on here, we see the next topic I'm going to discuss is valuing assets based on their Bitcoin and Ethereum pairs. So everything's obviously denominated in US dollars or whatever your local currency is. So I'm just going to talk a little bit here about kind of denominating it in a different currency. So obviously when we're buying altcoins or diversifying outside of Bitcoin, the goal is to outperform Bitcoin. If you're not outperforming Bitcoin, you're kind of taking on more risk for less reward. And then we see here, by valuing your altcoins on their Bitcoin pair, you can tell which specific assets may have bottomed against their Bitcoin pair. If they've bottomed against their Bitcoin pair, then they're likely to go on to outperform them more strongly than some of the coins who necessarily haven't bottomed, or maybe this technical setup just looks a little bit worse. We can see, obviously, we utilize the same technical analysis approach that we do with the USD pairs. And then we see the better an altcoin looks on a technical perspective in both the US dollar denominations and the Bitcoin or their Ethereum pairs, the more likely it's going to go on to outperform against the broad market. And then this is kind of how I prioritize my when I'm looking at pairs, how I prioritize it. So I'll look at an altcoin and then I'll look at the Bitcoin pair, and I want to ensure that the Bitcoin pair is at least holding its macro lows. Ideally, it's in that uptrend structure or kind of that trend reversal structure. And then once I identify an asset that's kind of looks like it's holding its support on its Bitcoin pair, then I'm going to flip to the US dollar pair here and then take a look at the US dollar pair, and that's where I'm going to look for my actual entries in terms of the dollar price that I'm looking to enter at. So just by doing this, you ensure that your asset has likely bottomed against Bitcoin and it will outperform, and then you look for that best risk adjusted entry on the US dollar pair. These two don't run in lockstep, so they'll be very different. Obviously, again, prioritize Bitcoin pair and then the US dollar pair. And then furthermore, if you want to even kind of analyze it a little bit more, kind of compared to other cryptos, you can also look at the altcoins on their Ethereum pair and just check if kind of if it's outperforming against Ethereum, if it looks like it's bleeding against Ethereum. Obviously, we want our assets to outperform the broad market, so being able to outperform Bitcoin and Ethereum is really key. And then focusing on that best risk-adjusted entry in terms of US dollars. We can scroll down here. Just talk a little bit about structuring your portfolio around narratives. So I talked in a previous altcoin video about different narratives and some kind of alts that might fall within that. Basically, every cycle brings new narratives. Some are repeated, so we do see stuff like gaming and DeFi and stuff has come back. But generally, there's a new narrative that kind of really catches a lot of hype during the cycles. So we have a few new ones this cycle. Obviously, last cycle we saw DeFi, NFTs, gaming, etc. These cycles or the narratives do not always stay the same. So this cycle, I would say definitely NFTs and DeFi have kind of taken a back seat for the most part. We see obviously old site. So sorry about that. Yeah, NFTs, DeFi taking a back seat. I do think AI, real world assets, and meme coins have kind of replaced this in terms of narratives. Gaming's still a narrative that a lot of people follow. I'm personally not kind of sold on the whole Web3 gaming, just as a kind of an ex-gamer as a kid. It just doesn't have the quality that I would want to expect as a gamer if I thought of myself as a younger version of myself. So I'm just not as sold on gaming. I'm sure there's lots of potential, lots of money to be made in that sector. It's just not one I'm really personally following as much, but that's fine. We can all have different strategies and different goals. If you like gaming and you do believe in Web3 gaming, then by all means look into that asset class and find some promising cryptos that you could kind of invest in. But I'm going to be looking at a few other narratives this cycle. You obviously see the narratives don't always stay the same. By following the new narratives, we can try to avoid investing in dinosaur coins, so like old cycle altcoins that they're unlikely to break their previous all-time highs. So again, we want to kind of invest in the coins that are going to likely do the best throughout the cycle. We're trying to increase either the Satoshi valuation or the US dollar valuation of our portfolios. So we see these narratives are often very well known. A lot of the well-known influencers in crypto have definitely positioned themselves in these narratives, especially some of the ones I'm going to talk about. So it does kind of attract more liquidity just because you have so many people pushing this narrative onto every new investor that they're going to listen to the people that they think are more experienced. I know I did when I was brand new. So again, just by positioning ourselves in the right narratives as well as the right coins within those narratives, we can really maximize our potential returns. We see here, you're going to have to decide for yourself which narratives you want to prioritize and how you want to weight those narratives. If you're unsure, just picking a few narratives and a few coins within each of those narratives is a good place to start. But also keep in mind, you're going to need to manage this portfolio. So if you're buying 100 different altcoins, let's say you're putting 50 bucks into 100 different altcoins, that's going to be a big headache right away. Essentially, you're going to have to track 100 different coins, know when to sell, know when to take profits, know if you have to cut something. Yeah, so managing a lot of coins can quickly become a major headache, and that's one of the big mistakes I see from new crypto investors. They just want to get their fingers in a little bit of everything. When I kind of approach it from a different approach. I look at kind of finding the strong fundamental assets that fit within the narratives, looking for those strong technical levels to accumulate them, and then I just allocate more capital to higher conviction plays rather than spreading all my money out over a bunch of different plays. You can kind of think of it like if you're using like a sniper rifle as opposed to a buckshot shotgun. Yeah, we're really not out here trying to spray and pray. Yeah, we want to have a strategy and we want to follow our strategy, and we base that off of our analysis. So yeah, again, a lot of people make this mistake, and they'll even end up consolidating all their altcoins. So they'll buy 20, 30, 40 different altcoins, and then maybe the market dumps, and then they're worried about managing those altcoins. A lot of the times they'll even capitulate at a loss just to consolidate it back into something more manageable. So, depending what you're comfortable with, how much time you have to follow these things, like for myself, I like to follow maybe 10 to 15 altcoins max is what I want to hold kind of simultaneously. But obviously, again, your own strategy is going to be different. Just do whatever you're comfortable with. But yeah, don't get too crazy. And yeah, don't spread it too thin there. Now we see obviously keep in mind your risk tolerance will also play a part in how you structure your portfolio. So for this reason, when choosing narrative plays, I like to include a low risk, a medium risk, and a higher risk option. So generally, that's just kind of due to the market cap and the size of the project, and then weight them according to the personal risk. So kind of just going down here. Well, first I'll go over, we'll take a look. I had this in a different video, just talking about structuring a crypto portfolio in general, just kind of how I look at it. Obviously, you can kind of change these weightings around how you see fit, but I do think Bitcoin should be a major proponent of the portfolio. Obviously, it's the oldest, most well-known, most secure, and most trusted crypto. Even Ethereum, it's really trusted and really well-known, but it still does not have the same kind of level of notoriety as Bitcoin does. A lot of people aren't bullish on Ethereum. That's fine. If you like blue chip alts more than Ethereum, and you think the Ethereum killers like the layer ones are really going to do well and kind of outperform Ethereum, then by all means, really, you don't have to invest in Ethereum. This is just kind of a rough kind of idea for anyone who's new looking into it, kind of general weightings they might look at. And it's just a well diversified crypto portfolio, in my opinion. But obviously, if we get back into here, so when I talk about narratives, this is what I mean. So I have my narratives laid out here that I'm targeting for the cycle. I've got my layer one narrative, so that's my ETH killers. I've got my AI narrative, I've got my real world assets narrative, and I've got my meme coin narrative. Obviously, we see the lower risk here. Solana or AVAX would be my low risk L1 choice. Medium risk, Near. Near is also an interesting one because it kind of captures some of the AI hype as well. So if you can get some of these projects that kind of capture different aspects or different narratives as well, that's going to be really beneficial. So we see like Solana, the meme coin casino on Solana is huge, so it kind of has a bit of ties with that meme coin over here. The more meme coins get traded on Solana, the better the metrics look for Solana as a network, and it kind of will increase. AVAX has a lot to do with gaming, so if you're bullish on the Web3 gaming, an L1 you might be interested in is AVAX, and then Near for that AI. Sui is an interesting one just because it's a US based crypto. It's done very well this cycle. It's a new L1, so it kind of doesn't have the same level of resistance or the same sellers that some of these other projects will face. Obviously, when we get to all time highs, there's people who bought these projects at those all time highs in a prior cycle, and some of them have been sitting on these losses for years. And they're just going to take what they can get and get out when they can. So, some of these ones that are older and have more price action and more resistance levels, they actually face more selling pressure in the kind of parabolic phase where we see ones like Sui. If they break into these things we call price discovery, where there's never been any price action above it, so there's no actual support and resistance. So Sui is a good candidate for that, as well as a good candidate just as a US based crypto with a pretty solid team backing it. So keep following Sui. I'm looking at AI. So like FET or Tau might be one of my lower risk bets here. AIOZ as a kind of medium risk, and then Virtual as a higher risk. So Virtual, it's a really high market cap, but it grew so fast and it's so new that I kind of am still just leaving it in that higher risk category. And then so for RWA, I'm kind of looking at Link as the main one here, Ondo as a medium risk, and then kind of as a newer, slightly higher risk. Excuse me. And then for memes, we've got Doge, lowest risk, obviously the oldest, most experienced meme coin. And then we've got Sheeb and Pepe. So I think Pepe is essentially going to be like the Sheeb of last cycle. So Sheeb really outperformed Doge last cycle just because it was the new hot meme coin. And when people saw Doge run, they wanted to find the next best thing. So to me, the next best thing this cycle is Pepe. But if you like Sheeb, then I could put Sheeb in that medium risk category as well. And then kind of in the higher risk, we've got Brett here. So that's kind of a play on Base Network. If you're bullish on Coinbase and Base this cycle, then Brett might be a decent little higher risk play, or kind of whiff. One of the smaller Solana based meme coins might be a little bit of a smaller play. So you see here kind of an example of lower risk weighting. If you wanted to, and so it's kind of going to get into how you would weight each of these coins within the narrative. So let's just say, for example, you had $20,000 you wanted to put into altcoins. And let's say you wanted to put it into the the four different narratives that you're following, equally weighting each narrative. So essentially what I do is I weight my buys of the higher risk assets more than my lower risk assets, or the lower risk assets are weighted higher than the lower risk assets. Sorry about that. So you see here, Solana, how much I want to weight of the actual narrative. So if I want to put, so obviously if I want to put $4,000 into L1s as a narrative, 50% of that is obviously 2,000. And then you see here that ends up as 10% of your overall altcoin portfolio. And then obviously going down the list, you see 30%, 20%. So that's kind of just rough numbers. Obviously, these aren't concrete, and it's not actually like a portfolio that I have right now. It's just to kind of show you how I really like to break up and structure my portfolio to kind of just remove the emotion. I'm not just buying blindly into whatever projects I think at whatever prices. I do have a strategy behind it, and I want my portfolio weighted on a risk adjusted basis that's suitable to my own kind of strategy. So we see here, obviously going down the list, and you can see the respective kind of overall percent of your altcoin portfolio. So you do realize you're never taking excessive risk in any one alt, essentially. So you kind of avoid the potential for you go all into one thing and that dumps, then you're going to really be regretting it. The same thing saying how we don't want to spread ourselves too thin. We also don't want to put all our eggs into one basket. That can basically result in just as bad of performance if we kind of get on the wrong end of things. And then we see here in obviously fetch is our kind of lower risk. So again, 50%, 35%. Virtual. So virtual, I weighted lower at that 15% because it's so new. So again, a lot of the brand new coins. Same with Brett down here. It's a pretty new meme coin. So kind of again, I really just focus my weighting kind of based on the risk factor, and then that's kind of the main thing. Obviously, we see here narratives change from cycle to cycle. So our goal is to not really hold these beyond the current bull market because altcoins just get wrecked in the bear market. So remember, never marry an altcoin. The primary goal is to outperform Bitcoin. So your goal is to increase the US dollar valuation or the Satoshi valuation of your portfolio. So essentially that's what we're doing by ensuring that both the Bitcoin pair and the US dollar pair present a good technical setup for what we're looking for. And then this is just a bit of a visualization kind of what your portfolio might look like once fully deployed here. So just a little idea. Obviously, you can see not taking excessive risk in anything, pretty well diversified. And I do believe that all of these cryptos will do well in an alt season. So they're ones I'm definitely watching, and we'll get into some of the charts kind of later on. But we're going to get a little bit into the DCA approach here, kind of how I accumulate things. So you see me talking about DCAing, dynamic DCAing, or lump summing throughout my videos. So there's a few ways in which you can deploy capital in the markets, and each is going to have their own risk reward factor. Obviously, the first and one of my most favorite is the dynamic DCA. So that's dynamic dollar cost averaging, and that's spreading your total allocated capital across multiple levels. And in many cases, this is going to increase the size of your buys as you get to lower targets. So the lower the price goes, it gets to your lower targets, you're going to start increasing your buys, and that's the dynamic aspect of it. So let's say you want to buy Bitcoin at 90,000, 80,000, and 70,000. That's just an example, so don't take those numbers with any weight or anything. But let's say you have 30,000, or let's say you have $10,000 and you want to put it into Bitcoin, and yeah, your targets are 70, 80, and 90,000. Essentially, you're going to split those up. So when you hit 90,000, maybe you put in $2,000. When you hit 80,000, you increase that by, you put in $3,000. So now you've allocated 5,000 out of your total 10 that you have, and then maybe you drop down to 70, and then you put in that last 5,000. So by increasing your buys as the price gets lower, you're actually getting a better adjusted cost basis. So that's where we see here the associated risk. You do have a better adjusted cost basis. However, there is the potential that some of your lower targets do not hit. So you have to recognize that. Alternatively, we kind of have a scheduled or regular DCA. So that's just adding money as you see fit, either on a schedule. So maybe you do it every week, maybe bi-weekly, monthly, something like that. Or maybe you just DCA when you have extra cash, so that's fine too. That being said, it's a bit of a blind strategy. You're not really sure if you're buying into resistance. So we do see here, it's a pretty low risk with a long enough time horizon. Again, assuming that you're buying assets that are going to appreciate over a long period of time. If you're trying to DCA over years and years, then I wouldn't really be looking at altcoins to kind of fit that role. Bitcoin and Ethereum, I think, can offer good options for DCAing over multiple cycles. But for altcoins, they're really more cyclical plays, and we want to kind of capitalize on the cyclical volatility. But that being said, you definitely can still DCA into the altcoins and see good returns. But you could impact, I mean, it could also be negative if you started DCAing when times are kind of overheated or during euphoria. And the market goes in a downturn, then if you just started kind of DCAing at the highs, then yeah, it's going to hurt right away if it kind of dumps the opposite way. But again, that's the beauty of DCA, is you're not getting too hung up on the price. Your idea is that the price is going to appreciate over time, and you're just allocating money as you have it and as you're comfortable kind of putting that into the market. So another good option, I kind of like the dynamic or more of like the strategic DCA, focusing kind of using a combination of the strategy as well, just backing it with a little bit of technical analysis. And then we also see lump summing. So that's just deploying all your allocated capital all at once and holding that position. So if you're looking to lump sum, definitely make sure that the technical setup actually backs that theory. You don't want to lump sum into resistance. You don't want to lump sum a peak. Yeah, it's going to be rough if you lump sum the top of the Bitcoin cycle and it dumps 50%. So good luck kind of staying convicted in that case. But a lot of us crypto investors have been there before. So we're just trying to help teach you from our own previous mistakes and prior cycles. Yeah, again, just the higher risk to buy into resistance or buy the top, and then not having any capital remaining to lower your cost basis if the market does go in that downturn. So I talk a lot about hedging strategies. Essentially, that's just being prepared for any outcome. If you're going to lump sum into the market, I would at least have a cash position that you can put in if you were to dump. So maybe you only put 75, maybe you lump sum in 75% and you save 25% for that dip or whatever you're comfortable with. Obviously, again, it's going to be kind of situational. And then moving on here, so we look at, obviously we need a profit taking strategy. And again, everyone's profit taking strategy is going to be somewhat different. A lot of us have been guilty of kind of getting crazy gains, and then we just assume that it's going to keep trending up. We don't take profits. And then the market turns around, and then we're kind of in that bias that, oh, like the next one's going to bounce and it's going to continue up, or the next bounce is going to be the one. And then essentially we're just stuck round tripping our bags. So you watch the price shoot all the way up to the moon, you don't sell, and you watch it come back to earth. That's a pretty discouraging thing to happen to any investor, and it's probably going to happen to you guys at some point. But hopefully, just by addressing this right now, we can kind of avoid that taking place. We do see here, as a general rule of thumb, I like to take my initial investment out as soon as possible. So that by doing that, I call this a house money trade. And then I take my profits on a dynamic DCA approach out, and same as DCAing in, and then maintaining some exposure to the market. So there's a few different strategies here. My first rule of thumb, if you hit a 2 to 3x, especially if you hit it really fast, I like to get my initial capital out of that trade. At least then I've fully de-risked, and everything I have in that trade is just house money. I know it's not like a casino, but you're kind of thinking of it as a casino. So you think of technical analysis is like counting cards, And then the house money, yeah, you don't want to risk your own money. So as soon as you've doubled it or even tripled it, because some of these move really fast, I'd never see a problem in just taking that initial investment off the table. You then have it and you can put it in other investments if you see other opportunities elsewhere, as well as just removing all the risk from that trade, because whatever you have left in it is house money. And then I'm going to do my dynamic DCA out. So utilizing technical analysis, I'm going to look for 2 to 3 potential profit taking targets, and I'm going to sell a portion of my position at each target. So let's say obviously you buy in, you double your money, so you take half out, and then you now have these 2 targets that are higher up. So as you reach each target, maybe you sell another 50% of your position, and then you reach your second target and you sell another 50% of your position. So now you're just left with a small position. It's probably about a third of what your overall entry position was, or overall initial position. And that's what I call the moon bag strategy. So as the price reaches your targets and you take profits, leave a portion of that position. So that's what I call a moon bag. No one can predict how long the market's going to keep running. So if you sell everything and you watch something then go up and do another 10x or something, like that does happen to people. Yeah, it's going to cause a lot of FOMO, and it might actually have you wanting to buy back into that coin. That's not the best play, I find. So I'd rather just maintain this moon bag, and then utilizing stop losses and trailing stop losses. So as your price kind of exceeds your targets here, you can really utilize trailing stop losses to ride the momentum further up and protect the majority of the gains. You do run the risk of being wicked out if you're running stop losses. Yeah, you can get wicked out of your positions, so something to keep in mind there as well. But definitely a useful strategy for kind of protecting your profits as they come. Sorry about that. I'll just move this over. And moving on, obviously, personally, I like to combine all 4 strategies. I like to focus on wealth preservation first and growth second. You can't grow your capital if you've lost it, and that's why we really focus on the risk-adjusted approach to these assets. We want to make sure that we're hedging ourselves for the best possible chance of riding the upside momentum. Kind of using a blended strategy of everything I've just mentioned above works best for myself. That being said, you're going to kind of have to come up with your own ideas, your own strategies, but this might give you a little bit of a good sense of kind of how to structure a portfolio, as well as just remove some of the emotion behind investing in some of these assets. And obviously, the goal of this write-up is kind of help newer people who are trying to navigate the altcoin market. It's obviously full of volatility, endless bag shilling by influencers. So lots of people are going to be shilling you everything. They're going to tell you it's only going up. Even this year, we've probably had about 100 different calls for alt season by different influencers, and then ultimately the alts just ended up bleeding. So you really gotta kind of just learn the analysis, learn what the charts are telling you, and listen to the charts. Don't listen to the people on X. Yeah, the people on X who've bought these projects at a fraction of the cost. Sometimes they're even incentivized by the projects themselves. They have partnerships and stuff. Like, you really got to be weary of whose advice you're kind of taking. So take it with a grain of salt. Even everything I say, take it with a grain of salt, because my strategy is not yours and my goals are not yours. But again, the whole kind of point of this is to remove that emotion and then stop us from FOMOing, stop us from buying resistance, and stop us from capitulating when it makes sense to actually be buying more. And then, yeah, so don't fall in love with an altcoin. Most are unlikely to thrive beyond one cycle. And then, most importantly, remember your goals and your strategy are not mine. All of the info discussed here is just based on my own opinions and risk tolerance, as well as my own strategies and experience. You can adjust the weightings or individual assets as you see fit to kind of suit your own personal strategy. As always, thank you very much for the support. So I hope this was of use to some people, and kind of how to approach the market and how to structure a portfolio. I'm going to put another video out today covering a lot of these altcoins. So all the altcoins I talked about right here, I'm going to put out another video just charting these and showing you my thoughts on all of them, kind of my approach to the actual technical analysis side. I will do it in a separate video just because this one's already running a little long, but keep an eye out for that. If you enjoyed the content, if you found something of use, you learned something new, please like, share, subscribe. It all means the world to me. And thank you very much, guys. I'll see you in the next one. Bye.